Indiacharts publishes Nifty Daily, daily video updates, the weekly Elliott Wave outlook, and the long short report covering all asset classes.
Hi everyone, this is Rohit Srivastava, founder of Indiacharts, recording for the 20th of May 2021 after a couple of wild days in the market, or rather markets I should say, because we've seen volatility coming from everywhere. But net, if you actually look at the Nifty itself, I think we've pretty much survived the headwinds. So that's very, very important because what we are really coming into is that this could be the start, and that's what I'm really taking it as the start of a fifth wave of some degree. Now, which degree we'll figure out later on. But what we developed between the month of March and April was a triangle-like pattern from which we started to break out. There's been enough online social media debate, and I guess the debate will go on till you actually see the Nifty race off to new highs. But what really tends to happen when you end a third wave is that most people get convinced that this market rallies for real, and I think that might have happened post the budget, because the budget really made sense to a lot of people. You got a rally to new all-time highs, and then it stalled right there and stopped making new highs. And since then, we've been below the high that we made in February. So that's an important cutoff point where people recognize that yes, this move is for real, and a lot of the people who probably be on the sidelines would have gotten in. And now what you're seeing is the shakeout phase. So to actually make that fifth and final wave, many times markets shake you out right out of the fourth wave. So when you end the fourth and start the fifth, you get this zigzagging movement, up and down, up and down, up and down, which is what I think you're seeing for the last 2 weeks now. And each time it's done that down, it doesn't make new lows, but there's some news flow out there which makes people feel that yeah, this is it, and this is going to crash the market, but it doesn't really end up happening. So whether it was the second wave of COVID, which was looking really bad at the end of April, or whether it's the news this week of either Bitcoin going bust or China really putting restrictions on, or trying to at least slow down speculation on metals prices. So a lot of that news flow has really come in last couple of days, apart from the fear of inflation. And all of that is really getting absorbed by the Nifty, because if it had to really fall on, say, COVID, you would have seen the same kind of reaction that we have actually seen in Taiwan, which has fallen in 5 waves, which means that probably after a bounce, there's more selling left there. We should have seen the same kind of reaction, but we did not. So you also seen another Asian market, say Jakarta, which has been pretty much troubled because it's not really been able to take off to new highs for months now, and remains at the lower end of its multi-month range. So that's how it's been. Singapore's at least made some attempts, but again, I would say on a 1-year basis post-COVID, it's really not recovered the way we really have. So a lot of difference between these markets, and I think in that sense we've actually done much better, not just in terms of the previous year's performance, but also in facing the headwinds that we have recently. So that speaks out in many different ways. But like I said, you may relate all the movement to different news items, but if we had to react badly to these news items, we already would have. The fact that we have not means it's something different, and like I said, it's really behavioral, because there have been a lot of positive and negative news items all year round, and we've reacted differently at those times. We didn't have this kind of volatility at those times. The market just kept going up, and this time we actually seeing a lot of volatility around the news flow, which is essentially the third wave, fourth wave phenomena. That after the third wave, once the fourth wave is done, when you start rising again, people are scared, that probably this time it's not going to take off, and the newbies who've entered the market start getting shaken out. And so this zigzagging movement is, I think, the shakeout process. And once the shakeout process is done, and news flows already started to improve in terms of case counts and so on in India. Of course, we're not out of the crisis, but definitely some people are able to see some light at the end of the tunnel, which is a beginning. It's going to take time, because key is vaccination, and that's going to take a little while. We all know that. But markets are starting to get that buying interest all over again, and I think that's really the important thing. And you can see that in stocks and sectors. So that's another way to gauge the underlying strength. I mean, if this was such a weak market, would you really have seen the kind of strength you've seen come back to not just the metal market, which is more externally driven, but actually PSU stocks, PSU banks, small caps, because the small cap index has been one of the best performing indices, second to the metals since the day of the budget. And so that really puts small caps on top of the list. Now you can say small caps is all wild speculation, but essentially what I think has happened is there's been a lot of value buying. So market bounce back, a lot of sectors, which have still not started to grow extensively, like even autos, they've done well. But really, are you selling more cars than you did 2 years ago? So you may have recovered from the pandemic and prices bounced back, but the real buying by long-term investors has happened in value stocks. Now, even metals would have been a value stock a year ago. Today, it's somewhat entering the growth phase, which is becoming more obvious to people who were earlier not recognizing what was really happening out there. But you're seeing that value pick up in PSUs, which started, in fact, the PSU index only bottomed out in the month of October. And from there, we've seen the first wave and then actually a pullback. Some of the PSU stocks after that first wave have retraced 50 to 60%, including PSU banks. And so they are due to start their third waves, and that's where the value buying is happening. And similarly, in a lot of small individual companies where people may now start seeing the light that, well, this is actually going to be behind us, and 1 year down the line, if the economy picks up because of all the government spending, then why not buy these economy related value stocks that are just lying low because nobody cares? And that's what I think is driving some of the momentum. Now, along with that, of course, some junk stocks are going to move, and so you're again hearing junky names which always come up in every crisis. One of them I've tweeted about. I'll not make a mention here, so because it became a long tweet storm and a lot of discussion about it. There's some particular people who want to come and really tell me that you should look at this for whatever silly reason, because you should keep looking at such stocks that have never performed for 20 years. And I've been trying to come up with some business model that is workable and attracts the market's attention. The only time it moved was probably in the Y2K boom. So, but then there are other turnaround stories. There are many of them which have come out of NCLT and actually getting a second chance, and they may have been businesses that were run by managements, during the good times successfully. And there you might actually make some good bets, and you're actually seeing those kind of recovery stories happen one after the other. Same is happening with PSU banks. Like, of course, we know all the negatives about them, but they've been through, a pretty significant bear market, I should say. You've also seen a lot of, write-offs happen. They've sort of written off, provided for most of the bad loans that are going to come. Okay, and all they needed in the end was capital, and there's already a restructuring story around them, where you'll get a bad bank or a single bank, or you'll move away the bad assets in somewhere else. So you may even merge these with some other private bank. I don't know. There are multiple possibilities, but at least we are moving in that direction, which calls for some level of changes the whole idea that they've gone from being risk, and so I was averse to the PSU banks even till Jan or Feb, but now after the recent correction, I'm beginning to look at them more favorably. So you have this change. I think this is just one sector. I think many sectors are beginning to participate, including capital goods, including power. And so all of that I think is happening forward looking. You may say it's also driven by liquidity at this stage, because it's still time before you actually see numbers change. But that's how markets are. They're always forward looking. They start thinking 1 year, 2 years down the line, and then buying happens. So I think value is what you should continue to hunt for, because even a flat Nifty market of 2 months, liquidities continue to chase and buy up all the value in the market, so that the opportunity is not lost later. I think that's how I see the behavior of the market. The breadth has been pretty strong in the month of May, and I measure breadth as an AD ratio. So the AD ratio went through a down cycle in April, in Feb, in March and April, but that down cycle has not turned. The breadth, the advanced decline ratio has been rising consistently throughout May, and that's again a clear signature of underlying strength in the market, rather than where you get negative divergences or a falling breadth against a rising market, which would have actually been a bearish signal. So that's also missing. So that's why there are many things which are missing to really take a bearish call over here. And so I think it's the shakeout process. Before you get that move to new highs, you're shaking out weekends, and once that's done, you'll probably see the takeoff. Now, out of international news, what's really having an impact, I think, is the potential for a very short-term dollar bounce. So you're seeing some kind of an ending diagonal type pattern on the DXY, and that pattern can lead to it means that you have a near-term bottom and can lead to a maybe 38% retracement of the fall that we've seen from March. But I do feel that the fall from March is the resumption of the dollar bear market that I've been predicting for years now. And so now that you have the dollar bear market back, all the same asset classes that have been working come into play, which is what we saw. The commodity and metal space were extremely hot between April and March, but now you're seeing a correction, and it's been followed by this China news and the Bitcoin news, all of which acts as a shakeout. But I think once the dollar bounce is done, then probably you'll see interest come back to the sector. So, which in a sense I'm saying is there is some risk to metals. There's some risk to even precious metals, which I was bullish on till a day ago. But I'm just sensing that maybe the dollar bounce could even cause precious metals to see a near-term correction now. So within commodities, I would say the last man standing, which is really waiting for a deeper correction and has probably started in the last 2 days, which might also signal the turnaround, is oil. Okay, so sometime back, I think I posted a chart on social media of a 5-wave decline in US oil, in WTI oil prices. Even Brent has the same pattern. And what that really means is that when you see a 5-wave decline, just like I said in the case of Taiwan, after a bounce you see another decline in 5 waves, and so that then completes an ABC correction. So till that's not done, you simply have to wait, which means you are in wave B. Now sometimes wave B's can be quick and swift, but sometimes wave B becomes a triangle or a complex pattern and takes its own sweet time. So because it takes time, you can't really make a time bet that this is will happen in a certain time period. Only thing is, it's likely to happen. So my sense is that oil probably goes back to $56 before it really goes higher again. And that's one more shakeout point, because many times oil price movements are also related to economic moves or market moves. It puts pressure on some sectors on the downside as well, and reflects the same thing, which is liquidity moving around in markets. But one of the biggest liquidity indicators now has actually become Bitcoin itself. Now, since 2018, I think I've written this many times again and again, that Bitcoin will become a liquidity reflection factor, because what I noticed is, one, it started clearly showing Elliott wave patterns once it crossed the $1,000 mark, and I've been writing about it on my blog ever since. Not because I invest in Bitcoin. I mean, if we were permitted in 2011, I'm sure I would have bought it. But when I went to the websites, they said that not permitted in your country. So now sort of it's a forex violation break is what I understand, because if you try buying Bitcoin, they'll tell you to buy it with a card and they'll reverse it there. They found some loopholes to do it, but if those loopholes are spotted, you could actually stop you from getting your money back. I mean, it may lie in your account, but RBI might not let it get cashed into your bank again. That's something I noticed when I actually did a gold transaction, and then the bank said, "Oh no, this is not permitted," and so it's still lying out. You cannot get it back unless they permit it at some point of time. So that's something that can happen to Bitcoin as well. But from a liquidity standpoint, because while that's India's problem, in the US it trades in the futures exchange now. So having gone mainstream, what has happened since 2018, you notice that every time there's a major equity market correction, there's also a Bitcoin correction. And that's because liquidity has now, a lot of liquidity and money and hot money has moved into BTC. And so it reflects, when there's hot money, it means there's emotions, and when there's emotions herding put together, Elliott waves work the best, because they are essentially a study of psychology or behavior of the market, especially when there's a mass. And when there's an emotional mass, then those fives and threes, the fractals of Elliott waves just show up clearly. And so that's the beauty. The pain point is, of course, that those 5 and 3 wave moves are huge size moved, and if you can't handle that kind of volatility, then probably it's not your space. But it's very good to read into from a market standpoint. So the next time you see a Bitcoin correction coming, you can tell that maybe it will have a negative impact simultaneously with equities also. I mean, it may be equities came first or Bitcoin came first, one or the other. And if there's an equity correction coming, then probably it hurts Bitcoin as well. So you'll see this repeatedly, because it's the fear trade. It's similar to what happens in mid caps, for example, in India. Those who are here will understand what I'm saying, is that whenever there's a lot of margin funding and there's a lot of mid cap stocks people hold with the brokers, when there's a correction and the funding goes into negative, into loss, and people are not able to pay up, and if they're not large enough customers for which the broker will hang on, those stocks get sold. Now, when they get sold in the market and the loss is taken, how do you make up for that loss? Most large clients will end up having a portfolio of stocks also sitting with the broker in their DP, and then they'll sell those stocks and pay for those losses. So essentially, what ends up happening is you pay for your speculation in the mid and small cap stocks by selling your large caps, and that puts pressure on the market. So this is a long way of explaining what happens when fast liquidity is moving. And the same thing with Bitcoin happened, that you had large losses because of the recent correction, which you could have seen Elliott wave wise, because we saw a very clear 5-wave decline in A. When it did B, I said if it doesn't cross 61%, you'll get wave C. Once it started, I highlighted the level, which is C and A. If they were equal, you would have ended up at 43,000. It overshot that, went below 40,000 as well, which is fine. 1.618 times wave A is also possible, because you still had not got a confirmation of a reversal of wave C from an actual trend change, which I think now might finally happen today looking at the intraday chart. But confirmation is only after it closes, because yesterday also intraday I thought it was up and maybe it's done. But today, if it is done, if it closes positive, the 5-wave decline in wave C looks complete on the hourly chart. I've already posted that chart, and so that should lead to a recovery. And but that those losses which have been taken with a lot of accounts, getting closed automatically by the risk managers, eventually those losses get paid by equity sales, and so you see that pressure in equities as well. Probably it's absorbed already. It may have all been done and dusted in a day or two, and so then you start the recovery phase. So if Bitcoin starts recovering, I see equities also, US equities start recovering, that pressure eases. The longer term issue, of course, what China is doing, like banning companies from taking Bitcoin as payments and so on, those are longer term issues which remain. So if you are in this particular asset class, the biggest risk in this asset class is, of course, that government to go against it and consider it being used for various spurious purposes, whether it's moving black money, as we say in India, the hawala, or terrorism, or that kind of money. If they spot and find proof of that happening, or probably they are just allowing it to run so that they can allow that those kind of things to happen, and then they can catch the proof of it, and at that point of time you might get negative action in terms of shutting this down. The alternate, what can happen is they can find ways to prevent those things from happening, which is why it's becoming mainstream, becoming accepted by banks, and then banks will verify those transactions as an additional layer. And if you do all of that and make sure that there are no spurious transactions happening, then it may become an alternate asset class. The big debate there again is, will it ever become a currency, because governments will not allow it. But what it can become, because it's burning fuel and is a commodity at the bottom, and you've created an exponential function by creating math around the whole idea, which means there's a mathematical calculation that runs. There's also the halving of how many bitcoins you pay out to miners. That creates an artificial boom, and so you get this exponential move that keeps going on and going on and going on. Now, of course, I wonder where's the end point, because once a large amount of liquidity is gone into it, the belief is that it will stabilize, at higher and higher levels at some place, and then, but even if it stabilizes, I would sense that it will remain a liquidity function, because once you've got money which wants to hide there in a similar way as it wants to hide in gold away from fiat money, every time there are market related moves, just like we are seeing now, whenever there's a liquidity event like what happened during the pandemic, everything fell, bonds, equities, gold, and Bitcoin. So it's going to happen that all of the asset classes get hit in those times, and Bitcoin will always reflect liquidity moves going forward, whether it actually becomes a currency or not. The risk from an investment standpoint is it's getting banned by various governments, and being driven out by them, or made illegal by them, and so then it will function as an illegal market. That's the real risk to the whole thing. I don't know how that really plays out. In the meantime, I study it mostly to understand what liquidity is doing in asset prices, because it's the same emotional money, and it tells you something about what is going on. So moment we get a bottom in Bitcoin, like right now, it actually gives you a good sense that probably the correction is over. An ABC correction in Bitcoin means probably the equity market correction, which is like the Nasdaq's been down for quite a while, maybe at the bottom end of the range. those kind of calls are actually possible now, looking at this as a sentiment indicator more than anything else. And oil is the other one which I mentioned earlier as an indicator, not the same way, but similarly, we've seen many intermarket divergences occur along with oil. Many panic bottoms occur in oil simultaneously with a low in equities at that point. Not necessary that the lowest point in the equities equal to the lowest point in oil. Sometimes equities are making a higher bottom and oil is at its lowest point, like you can see in April of 2020. But once that is done, it definitely tells you that the broader trend has changed, which is what happened there. Once oil did that, went into a negative price, it was done. So I think once you get that oil correction down to $56, even though equities may bounce back from here, if there's a secondary correction going forward, at that point of time, the risk to commodities, which has been the other big driver of this market, will also go away. And then I think you'll get more of a one-sided momentum after that. That's where I think the oil view helps, that that risk is off. Also, I think an oil correction may be seen positively by some, because all of this talk about inflation being a global risk, when that was the trade for all of last year, it was the long inflation trade that I've been looking at. A lot of people who caught on to it have been looking at, because the falling dollar, drive up prices, spending by governments, all of that was going to lead to inflation. So inflation was the reason stocks did well. Now suddenly people are worrying only because, well, at what point will it drive up yields? But so far, most central banks appear committed to not driving up yields anymore. So not even seeing that risk as a major risk. And in fact, a fall in oil prices might just ease that, at least in the short term, in terms of one of the items that usually is considered an inflationary pressure point. So we'll get that pullback, and then once again, when oil prices start rising, commodity prices start rising, we may go back to that inflation debate. So that could be a couple of months down the line then. So in the meantime, let's in the short term watch out for that short term spike in the dollar, maybe a short term correction in metals and commodities. But the Bitcoin indicator says that equities have probably bottomed out as well in the US. The shakeout should have been done by now, and you should start seeing an upside there as well. Our own market is not made those new lows along with the Dow or the Nasdaq, because we already probably bottomed with the triangle pattern at 14,150, and from there should continue to slowly head to higher highs. Once all these news flows and the short-term shakeout is done, probably you'll see a much more one-sided move to the upside, with a lot of broad participation from not just value stocks, but also the large caps, which have been consolidating for quite a while now. So that's all in this update from me. Thank you.
So before you go, let me tell you that the mentorship program is live, and you have a complete set of choices, whether you want to go at your own pace, be a self-learner through the videos from level 1 to 3, or you want to join in on our webinars where you want help. But the video programs themselves are great and very self-helping, because we engage with you right under it. So you can see right under this video, which we've actually done on examples of trend and trend change. We have a lot of people posting their examples and understanding of the subject with feedback from me going on a continuous basis. So this is how you can actually start your self-learning process. You can actually move on and do assignments, provided you are in the level 4 for webinars and assignments. But if you have not, you can simply move on to continuing to learn and engaging. So the learning and engaging process itself is pretty much good enough, and every few days we are able to help people figure out what they're putting out there is right or not. So you can actually go that, and helps you do it at your own pace. So you can watch the videos when you want, as you want, and pull through it. But if you're taking the 4th level with the webinars and assignments, what we will need you to do is be part of a batch that because we do the webinars on topic by topic. Every few topics we take together on a Sunday morning, 2 hours, and if we are doing that, you need to of course complete the 5-6 videos before each webinar that we actually do. Because those are the topics that we'll actually get into discussing, and ideally you would have completed those, done the assignments related to those topics, and then we are able to actually have a fruitful discussion. So that's the whole thing. So you can simply click on mentorship program on top and see the different levels that we've created for you that you can actually participate in, from videos to webinars. You can listen to what others have to say who've been through the training with me last year, and it's up to you whether there are also a lot of tests, so throughout the process we're trying to test you whether you've learned correctly, and if somebody needs a certification, we can do that at the end of the entire course completion. So just check it out, click on mentorship page and figure it out. And if you have any questions further than what I've already said, apart from the FAQs already here, simply call up. Here are the details for contact. You can email, you can call Chavan directly, and he will attend to you, and you can understand what all we are really saying over here if you're not able to get it in first go, and if you still have any questions about how the whole thing really works. So just get in touch. Thanks.